Hey guys, and welcome back to Smart Money Minds. Today is March the 20th, 2021, and we're looking at a recap of last week's market. And once again, it's been another week of turbulent market. It pushed up to a new all-time high on the S&P 500, and then on Thursday and Friday, pretty much gave it all back. So let's take a look at what's happening here. Looking at the S&P 500 here, this week we had multiple events happen. We had the Fed's talk on Wednesday. So Jerome Powell was talking about the FOMC and seeing if they're going to hike interest rates, and that makes a huge difference if the market's going to go up or down. This week also we had options expiry. So that means a lot of people could be dropping, or a lot of institutions could be dropping a lot of their shares because of the complications of options, which I won't get into here. And so it was a quad witching day here, or quad witching day, on Friday, which basically a lot of things were expiring, a lot of people were buying and selling, which made for a lot of volatility. And if you want to read it up, this is here in Investopia for quad witching. Very interesting read. But that's why we had a very choppy market, because look at Wednesday. If we looked at Wednesday at 11 o'clock when Jerome Powell talked and the Feds talked, there was a huge spike when they announced that they weren't going to increase interest rates. What I'm looking at here is that this pullback is actually quite healthy so far. It's pulling back to here at the Fibonacci retracement of 0.382. And in this range here, where we have a couple of trend lines, this is a COVID trend line from the bottom of the trend all the way back up. So we're pushing back here. This trend line's coming back down as well. So we got a very good spot for it to rebound back up and slowly grind up between these two trend lines, this upper channel and within this trend line. So it's looking pretty good. We have the NASDAQ, which is creating a inverse cup and handle, or inverse head and shoulders pattern. And right now it's hitting the second shoulder and bouncing off this zone right here. So we're going to have to see where the market goes this week. But we're going to recap on some of the stocks that I was looking at last week as well. Starting 2 weeks ago, I implemented a stop level for every one of my top 5 stocks that I was watching that week. And I was saying that we need to stop out when that level hits, because that's when the play is invalidated. And due to the choppiness and the volatility of the market, we definitely needed stops for this last month. And you see here that 3 out of the 5 stocks that I was watching last week would have hit their stop, but you would still not be down too much. You'd be down less than 1% of your overall portfolio, because you were able to stop out and you had one major winner in AMC. And if you sold that Friday, you'd be up quite a bit. Let's take a look at the 5 stocks that I had suggested last week. So the first one would be GME. And what happened was I was looking at this slow uptrend and hoping that it would continue to break out. However, on Monday, it immediately dropped, and you would have stopped out right away, because my stop level was 240, and that created a bear flag and continued on the way down, creating a double bottom. There was an opportunity to play here for a bounce move, but you would have stopped out. You would have been down about 9%, but that was a loss that you had to take because it invalidated your thesis already, at least my thesis. So I would have stopped out. The next play I had here was AMC, and this played out very close to what I anticipated. So it actually moved up on Monday. It came back to backtest. So on the Tuesday, it came back to backtest this upper support area, or previous resistance, now support, and basically went off that, hit a double bottom, and continued on the move up. And this one, if you held, it was up 24%, almost 25%. This was the biggest winner of the week. The next one I had here was eyes. So I was anticipating a bull flag, but it continued to drop right down in this range. I wouldn't have stopped out though because my stop was at $10. So it actually came down and it hit the 0.786 on the Fibonacci retracement before going back up. But look at how choppy this was. This went up and it actually gave back a lot. And so it just wasn't an ideal market to be playing this name. The fourth one I had here was AI, and I was looking at this area here, which could have been a bear flag, and that's exactly what happened. I was thinking that it has gone down significantly with a doji candlestick forming, so I'm thinking there is a possibility that it could push back up, just even for small gains here, for a lower high, but it just due to market weakness, it continued to drop, and I would have stopped out pretty tight as well at 83. So that was the invalidation of. So looking at ET here, we were looking for another leg back up, but it didn't hold the zone of 220, and so it collapsed back down to the $8, actually dropped back down to this support range here around this zone. But I would have stopped out at $8 already, and that was it, and taken another loss here. But overall, the losses are not that significant given that the market was weak and you had pretty much 4 losses but 1 win that covered up every loss that you had. This week, looking to see if the market would bounce back up and melt back up, we have my top 5, which is TNE. Looking at this chart, it is sitting at all-time high. It is breaking this weekly bull pennant or this bull channel here with increasing bull volume. So we are looking up and it is looking pretty darn good here. I am thinking if we look up here on this, we have Fibonacci extension 34, if this is a wave 5, up to here. If not, we can always hit up to the $40 range, which is quite high here. I'm anticipating we'll need a higher low before we push back up, but this is a weekly breakout, so it is looking good for even past this week as well. The next one I have is Dkng. So given that the market was weak, Dkng actually had relative strength. It consolidated back to the 0.382 here around this range. It's sitting in this channel, this uptrend channel, that's pushing up. It is very close to all-time high again at 74. So I'm anticipating if it stays in this channel, then yes, it could collapse here. But it's holding up a very good zone, and if the market is pushing up well, we could very well see a new all-time high. And we also had Penn uplisting as well. So with that strength, we're gonna see if Penn will drive up other gambling stocks as well. The next one I have here is Facebook. Why I'm looking at Facebook, look at this weekly tightening range. And similar to TME, it is breaking out on the weekly zone, breaking out over 286 right here. So that's the first resistance. We're looking up back at 300, and we got increasing bull volume here. So once again, relative strength with market weakness during the end of the week. And look at Thursday, it came right back down, but immediately got bought up and pretty much just ran it right over this upper trend line. So we are looking good for this to continue. Look at this 1 hour bull flag. So enough said there, we're looking good. The fourth chart I have here is American Airlines. So looking at the weekly chart, it's pushing back up, almost back to COVID levels here, or pre-COVID levels. So right up here, we're looking up. We're thinking that airlines may open up again, but we're looking at the chart here, and look at the chart where we have pretty low bear volume. We have a channel that's forming right here, possible bull flag. We are just sitting in this range, not really breaking down, not really pushing up, and we got a good stop level here at 23.90. If it breaks down there, then we know that that's invalidated and it could go lower. So we can always look for another entry then. And lastly, I'm looking at BA. Look at BA here. We have a possible flag forming. Could be a descending triangle. But on the longer time frame, we have a very clear stop, 251. You can always use 250 or a little bit lower, 245. If it does continue to consolidate to the 0.382 range, it does look like that right now, but it could also very well be a descending triangle, which is a bullish pattern. It's not super clear. I just do like it because there is a clear stop level that you can get out of, and it is in a uptrend. So why not play with the trend with decreasing bear volume here? Let me know in the comments below how you did this week in the market, and if you took any of my trades that I recommended last week. Did you manage to stop out on any really bad trades that you took? Make sure you subscribe to my channel, like this video, and then we'll see you guys next week for my 5 stocks again.